Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 30th, 2026, and we're diving into the latest earnings report from Deckers Brands, a global leader in innovative footwear, apparel, and accessories. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Deckers Brands has just released their third quarter fiscal year 2026 results, and there's a lot to unpack, from record revenues to strategic guidance updates.
Revenue and profitability overview. Let's start with the top line. Deckers Brands reported a net revenue of $1.96 billion for the third quarter, marking a 7% increase from the previous year. John, what are the key drivers behind this growth?
Absolutely. The growth is primarily driven by the strong performance of their UGG and HOKA brands. HOKA's net sales surged by 18.5%, while UGG saw a 4.9% increase. This robust demand, especially in the direct-to-consumer and wholesale channels, has significantly contributed to their record revenue.
And what about profitability?
Deckers reported an adjusted EPS of $3.33, an 11% increase from last year. This is a testament to their effective cost management and strategic pricing, despite a slight dip in gross margins from 60.3% to 59.8%.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $2.72 based on a survey of 9 analysts. Deckers has exceeded these expectations with an actual EPS of $3.33. John, what does this tell us about the company's performance?
This significant beat of 61 cents per share indicates that Deckers is not only managing its operations efficiently, but also capitalizing on market opportunities better than anticipated. Their strategic focus on high-margin products and effective cost controls have played a crucial role in surpassing analyst expectations.
Strategic initiatives and future outlook. Looking ahead, Deckers has raised its revenue guidance for both HOKA and UGG. What are the strategic initiatives driving this optimistic outlook?
Deckers is focusing on expanding its market presence and enhancing brand value. For HOKA, they're expecting a mid-teens percentage increase, while UGG is projected to grow by mid-single digits. Additionally, their commitment to share repurchases, expected to exceed $1.0 billion, reflects confidence in their long-term growth strategy.
And what about their EPS guidance?
They've raised their full-year EPS guidance to a range of $6.80 to $6.85, which includes the impact of expected share repurchases. This indicates a strong belief in their ability to maintain profitability and shareholder value.
Operational efficiencies and market expansion. John, let's talk about operational efficiencies. Deckers reported an operating income of $614.4 million. How are they managing their expenses?
Deckers has been effective in controlling their SG&A expenses, which increased modestly to $557 million. Their focus on operational efficiencies and strategic cost management has allowed them to maintain a healthy operating margin.
And in terms of market expansion,
international sales grew by an impressive 15%, showcasing their successful global expansion strategy. Meanwhile, domestic sales saw a 2.7% increase, indicating steady growth in their home market.
Key takeaways. In summary, Deckers Brands has delivered a strong performance this quarter, with record revenues and earnings per share. Their strategic initiatives and market expansion efforts are clearly paying off. John, any final thoughts on their investment prospects?
Deckers is well-positioned for continued growth, with strong brand performance and strategic market initiatives. Their commitment to shareholder returns through share repurchases further enhances their investment appeal.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Deckers' performance in the comments below.